Welcome to the channel, where we uncover the hidden money strategies of the world's wealthiest minds. Today, we're diving into 7 investing rules the rich live by, rules most people have never heard, but that quietly separate long-term wealth from lifelong struggle. If you want to start thinking like the wealthy and investing like they do, this video is for you. Let's get started. The rich don't invest like the average person. While most people chase the next hot stock, listen to hype on social media, or dump money into get-rich-quick schemes, the wealthy follow a different playbook, one that's quiet, disciplined, and often hidden from public view. If you've ever wondered how the rich seem to get richer, regardless of market crashes, inflation, or economic chaos, the answer lies in how they think and invest. These are 7 investing rules the wealthy live by, rules most people never hear, but once you understand them, they can completely change the way you build wealth. Rule number 1. Never invest in what you don't understand. The wealthy never gamble with money they can't afford to lose, and that starts with clarity. Before putting a dime into an investment, they ask, do I understand the business model? Do I know what's driving returns? Can I explain this investment to a 10-year-old? If the answer is no, they pass. Because money without clarity is just speculation. Whether it's real estate, private equity, or a stock portfolio, the rich only invest in things they deeply understand or can control. Most people blindly follow trends. The wealthy do their homework. Rule number 2. Capital preservation first, returns second. While the average investor is chasing 10x returns, the wealthy are thinking, how do I not lose my money? Their first rule is, protect the base. That means diversifying smartly, avoiding unnecessary risk, ensuring assets, hedging when needed, taking calculated, not reckless, bets. They know that one bad investment can wipe out years of compounding. So they build a fortress before chasing profits. That's how they stay rich, by playing defense first. Rule number 3. Buy assets, not liabilities. Sounds simple, but it's a life-altering mindset. The wealthy use their money to buy things that generate more money: real estate, dividend stocks, businesses, intellectual property. These are assets that pay them, even when they sleep. Most people, on the other hand, buy liabilities disguised as luxuries: cars, gadgets, clothes, vacations, things that look good but bleed cash over time. The rich focus on building an income-producing portfolio. Then they use the income from those assets to fund their lifestyle. That's the real flex. Rule number 4. Cash flow is king. The wealthy don't just care about net worth, they care about cash flow. $1 million portfolio means little if it doesn't generate income. That's why the rich invest in rental properties, businesses, royalties, or dividend-paying stocks. They want consistent, dependable cash coming in every month. Cash flow gives you freedom. It pays your bills. It funds your investments. It reduces stress. The average person works for money. The wealthy invest in things that work for them. Rule number 5. Time in the market beats timing the market. The rich don't try to predict the perfect time to buy or sell. They know no one can consistently time the market, not even the so-called experts. Instead, they focus on staying invested in high-quality assets for the long haul. They ride out the volatility, ignore the noise, and let compounding do the heavy lifting. They understand, wealth isn't built in weeks or months. It's built in decades. While the average person panics in a crash, the rich see it as a buying opportunity, and they win by thinking long-term. Rule number 6. Use leverage strategically. The rich don't fear debt, they use it intelligently. They borrow at low interest rates to invest in high-return opportunities. For example, using a mortgage to acquire cash-flowing real estate, using business credit to scale a profitable venture, leveraging margin in a controlled way for stock investments. They never overextend. They use leverage like a scalpel, not a hammer. Average people fear debt because they misuse it. The rich master it, and use it to grow faster, with less of their own capital. Rule number 7. Think in terms of legacy, not just profit. Wealthy investors don't just think about the next 12 months, they think in generations. They invest in assets that outlive them. They structure trusts, foundations, and long-term portfolios for their kids and grandkids. They care about building something sustainable, not just profitable. This mindset leads them to make smarter, more patient decisions. They avoid the hype and focus on value. They build slowly but securely. They're not just investing for lifestyle. They're investing for legacy. Most people never hear these rules because they're not flashy. They don't promise overnight riches or viral success. But they're how real wealth is built, and why the rich keep winning. So ask yourself, are you chasing returns or protecting capital? Are you investing for income or appearances? Are you thinking 5 years ahead, or 50? Because the difference between average investors and wealthy ones isn't access or luck, it's how they think and how they act. Master these rules, and you won't just invest like the rich. You'll start building wealth that lasts. The wealthy don't gamble, they follow principles that compound wealth and protect their future. These 7 rules aren't taught in school, but they shape financial empires. The sooner you apply them, the faster you break away from the average. Thanks for watching, subscribe for more real-world wealth strategies, and until next time, build smart, invest smarter.